we have 10 commandments of investing, and the 10th commandment is called mind the mind. And essentially is mindset. Is the first 9 commandments are very, very important, but they're useless unless you have a certain mindset and psychology and in many sense routine. And so from talking to for our research and talking to the most successful investors, whether talking to them live or just reading about them, Dalio, Kathy Xu, we interview, they all put sort of your topic as the number one important thing is really having a mindset which drives discipline.
Welcome to the Real Estate Mindset Podcast, hosted by Eric Nelson and brought to you by Wild Oak Capital. Eric is a real estate investor, business owner, and performance coach. Throughout this series, Eric explores the mindset behind why certain investors are so successful and how we can learn from their achievements and failures. Eric asks the tough questions around the habits, discipline, mindset, and more required to achieve the most ambitious goals. Thank you for being here and enjoy the show.
Hey, everybody. Welcome to the Real Estate Mindset Podcast. This is your host, Eric Nelson. Tonight, I have 2 awesome guests. Super excited for the show. It's always fun to have 2 people, and this is fun because it's father-daughter, so there'll be some dynamics here. But San and Oia Eng, thanks for being here. I guess what we'll do is we'll start with both of your backgrounds. So San, you have a little bit more experience. So if you don't mind going first, tell us where you came from, what you've been up to. You have such a cool story. So we'll kind of dive into your investments later, but your background and what led you to real estate, and then you can go next.
Great. Well, Eric, thanks for having us. Good to be here. And thank you for being so diplomatic in calling out my old age. So
yeah,
I guess,
you're welcome.
I guess you can say I'm on version 3.0 of my life. 1.0, I was an entrepreneur, primarily tech and consumer. Started and ran half a dozen companies in the U.S. and primarily in China. Raised about $150 million of venture capital in that. Then 2.0, I worked as a professional venture capitalist, so as a professional investor, starting and running VC and private equity funds, non-real estate, more a tech consumer, some infrastructure. There were some real estate related, but they were not real estate funds. I took 5 years off, which expired about 2 years ago now, when I turned 50. So the past couple of years, 3.0 have focused quite aggressively with Oia on real estate, in particular multifamily real estate. But we're invested in different asset classes within real estate as well.
Oh, awesome. So, there's a lot to dive into there. We'll come back to, but let's hear about you.
Yeah. Hi, I'm Oia. I'm 18. I just graduated from high school a few months ago, and I'm taking a gap year before going to college at the University of Chicago to learn about multifamily, as my dad mentioned, because I want to achieve financial independence and financial freedom. And I think that's the best way that I've learned of so far.
You had to tell them whether or not you're forced into this, Oia.
I was not forced into this.
Yeah, that's key.
About real estate over quarantine, and I thought it was a really good asset class. So,
yeah, that's a good point. If you're not forced into it, the gap year isn't truly being forced to find a deal. So let's dive into that first. Tell us about what you're doing. You said you have a gap year. It sounds like you wrote a book. You've been looking for deals. Give us a little story on what you're doing now.
Yeah. So over quarantine in March of last year, my dad and I started writing a book with my cousin, Tim, and my dad actually started at first, and my cousin and I came in afterwards to kind of refresh the book and
to make it work.
to make it publishable. And the book is called The 10 Commandments of Investing. So it's all about what we think are the 10 most essential rules and things to follow as investors. And we looked at all different types of asset classes. And I also, at the same time, while writing this book, I was also learning about real estate with my uncle and my dad, both smaller deals with the BRRR method, and also syndication for larger deals for multifamily. And so I learned to underwrite over quarantine. And so I'm taking this gap year to also continue underwriting, and I've sent in a few letters of intent, and I'm hoping to close the deal over gap year. And once I make some money, I'll also travel.
Oh, I like it. There's so much to it. So I don't want to hammer you here too hard, but I mean, that's, first of all, it's incredible, and congrats on helping make the book publishable. I think you're being probably a little modest. I'd imagine you are a bigger part of it from what we're hearing. So that's so cool. And to submit LOIs at the age of 18, that's amazing. So congrats. You're off to a great start. So where are you looking? What's the markets you like? And then do you have you described kind of some methods. So do you have some metrics that you personally look at when you underwrite?
We've been mostly looking at deals in Florida and New Jersey. So my dad and I actually just came back from a very long road trip where we drove from Toronto down to Florida. And so
that's a long road trip.
Yeah, we drove around looking at properties just because I think it's a very different feel when you actually get to go in person and tour and meet the brokers. But mostly Florida, Clearwater, and then New Jersey for smaller deals, sub 20 door deals, which is what I'm starting out with just because I have capital restraints as an 18-year-old, and also because it's a little bit less intimidating to start out with smaller multifamily deals for myself. And yeah, we've been mostly looking at syndication for the larger multifamily deals. And when I'm underwriting, my dad and I joined a group called the Brad Sumrock Group. And Brad Sumrock is based out of Texas, but it's a pretty national group of people who are into multifamily, and it's a great way to network and see new deals. And Brad Sumrock also put out a series of videos about underwriting, which is how I learned. And so I watched all those videos and started practicing.
Yeah, no, I love it. He had a conference recently, maybe 3 weeks ago in Dallas. Were you guys there by chance?
Yeah, we drove there from Florida.
Oh, nice.
And then drove back to Toronto.
Oh, yeah, very cool. Yeah, of course. I mean, Brad Sumrock has a great program, and of course has success with students. So that's really cool.
Were you there?
No, it's funny because Michael Blanc's
Yes.
was the same weekend. So I actually attended Michael Blanc's that weekend.
Oh, wow.
I think some people jumped between the two. I don't know if we're supposed to say that on a podcast, but no. So I actually use Michael Blanc's underwriting tool, and my mentor was speaking at that. So I went and supported him, and it was a great conference as well. So interesting. It was the same weekend. Dallas was full of multifamily investors that weekend.
Yes. Yeah. It was a good weekend.
Yeah, for sure. Cool. So San, tell us about you a little bit more. I'd love to hear your background. It sounds like you've kind of invested in everything, but what's cool about it for this particular podcast is you landed on real estate. So if you could dissect that a little bit, tell us what you've done, and then seemingly why you came back all the way around to real estate.
Yeah. I guess there's a long answer to that. I'll try to make it brief. I've always done real estate as a side dish. So whether I was living in the States or Asia, I've always bought and invested on the side. And for whatever reasons, we've always done well with real estate. But I always had something else going on, whether it's doing a startup, venture-backed startup, or running a VC tech fund or whatnot. So I've always had real estate for many decades. I just never took it seriously. But after the 5 years, I had a lot of time to think. Obviously, researched the book, talked a lot about successful people. And for this stage of my life, pre-COVID, I was actually anticipating a major crash. It obviously did not come despite COVID. And pre-COVID, my conclusion was I need to be 70% plus with my own money in multifamily, in particular, US multifamily. I was also pretty heavily invested in Canadian mortgages. We were in about 5 or 6 mortgage funds that were providing 8-10% yields, but no upside. It's just a fixed return.
Sure. Yep.
Then when I started looking seriously at multifamily, I felt that, again, this is all pre-COVID, that when the economy does crash, this is probably the safest asset class to put the majority of my capital in for both cash flow and also upside, if you include the exit and refi value adds. And COVID proved even more convincingly because by then I had invested, I joined the Sunrock Group, I was passive in a few deals. And for the quality multifamily, particularly the B and C in top markets, we flew by COVID. When we went around the table and said, how's your asset doing? How's your asset doing? It didn't blink. In fact, a lot of markets did better, right? So there's a test for that. COVID did test. I mean, certainly other asset classes like A class in San Francisco and New York did drop, and maybe some of the C and D class did drop, but the right assets in the right markets actually did quite well. And obviously now we're a little bit deep into COVID, and I'm still quite confident that in whatever market, this is an all-weather asset class.
Yeah, I completely agree. And I really love what you're saying, because for us, we love B and C class for that reason. B minus is kind of the sweet spot, if you ask me personally, for just that reason. It's kind of weathers the storm. Everyone needs a place to live. If you're in the A class asset and there's a downturn, lots of people will look for a B class property,
Sure. Sure.
And if you're in a D class property, there's nowhere really else to go. And so it might just suffer from, folks not being able to pay or whatever it might be. And so, yeah, I think one more thing, San, is that you're first generation, correct? I mean, first generation Chinese American. And can you tell us a bit about your background, what that was like? Is that what also give you some grit? I mean, kind of your, this is a mindset show. So I'm trying to dive in to understand, that's a long way to come from where you were to where you are now. I've heard you on other podcasts. It's an incredible story. So if you don't mind sharing a little bit about where you came from as well.
Sure. Thank you for that. Yeah, I am first gen, I guess probably first gen. I arrived in New York City, Chinatown at age of 9. I was born in 1969. And if you know some Chinese history, that was a tail end of the Cultural Revolution. So in China, I was actually privy to some of the Chairman Mao inspired killings, where they rounded up folks, social sort of capitalists and whatnot into trucks and take them and shot them. I was towards the tail end of that, and my parents were lucky enough to have some connections to sponsor us, particularly our uncles, to sponsor us, lend us some money to come to America. It was a really, really long story and arduous task, but we made it here via Hong Kong. And 6 of us, myself and my 3 older brothers, and then my grandma, who became the 7th, we all shared a Chinatown tenement building, 2 bedrooms, probably about 550 square foot. And just, typical immigrant, worked hard, studied hard, went to good schools, and got jobs, and did different things. And now we're doing multifamily. So had a very lucky life. In some cases, for Ia and her sisters, they are a bit more comfortable, but comfortable doesn't always means better, right?
Yeah, no, I agree.
Doesn't apply to Ia. Ia is taking challenges, so that's good. But in a sense, you can say if you came up hard, you actually learn a bit more.
Yeah, I mean, I think there's so much to take from that. So I appreciate you sharing for sure. And then one thing that you mentioned as well is it took 5 years off. And what was kind of to me, that's such a cool thing to do, to spend time with your family. So was that kind of the reason behind it, or why did you take that time to take a sabbatical?
Yeah, I'd say professionally, that was probably the toughest choice, because I had already invested about 17 years as a returnee to China, sort of finding my way. And I had started a private equity platform that was thriving. We were ranked at some point top 30, top 50, depending on which ranking, out of thousands of funds in China. We were already 10 figures and growing in terms of assets under management. But a lot of people that are not in the buy side running funds think it's a piece of cake. You're just dishing out $10 million checks, right? But you and I both know that when you have money, you have responsibility. So it was actually very much more than a full-time job chasing deals, managing portfolio, because you have to be responsible. So I wasn't spending any time with these kids, her and her sister. So anyways, just decided to walk away from that when I turned 45, and then spend the next 5 years together, but also individually, right? Taking the kids on father-daughter trips and whatnot. I had a chance to take my parents to a number of different trips. Co-wrote a book with my dad, and then obviously spent time researching this book as well. Oops, where's the camera? It's not showing up, but the book in the background. So it was a great 5 years. And yeah, so Ia, I think, has now been to how many countries?
A little less than 30.
Yeah, so she's and her sister's 20. So it's just been a tremendous time, because they were still tweens at the time, so they still thought that I was cool. That day has long passed. She's only smiling because you're here.
She's smiling because she agrees.
I don't know. But yeah, I think that was probably the best time, because they were old enough to understand and appreciate different cultures as we travel, right? And sort of soak in the culture and the cuisines, but not so old that they don't want to travel with you anymore. Yeah. So.
I like it. Sounds good. Well, let's jump to the book. Ia, can you tell us a bit about the book? How did your time with research go? Sounds like you were, seniors in school, but COVID maybe played a different role for you. What was it like to write a book, with your dad, but also the research behind it? I mean, was it fun? Was it challenging? And was all the stuff? So tell us a bit about the book to start with, and then specifically the research.
Yeah, so the book actually started out as a different book. So it was originally called The Investor's Bible, and that was actually started by my dad. So I don't know if, Dad, you want to start, and I can take over.
Yeah, so my brother Ed, my older brother, he was CEO of an investment bank, sort of a SoftBank affiliated investment bank in Hong Kong. And so for the prior 10 years, he and I just were lucky to have worked with a number of very successful investors, and he especially read a lot of books. So we just collated. Do you remember Cliff Notes when you went to college?
Oh yeah, anyone who went to college and they don't admit that, they're not telling the truth.
Yeah, so it was basically Cliff Notes, Investor's Bible, where we said, okay, what did we study Buffett, for example, and we would put together two or three pages of Buffett's great thinkings. But we did that with dozens and dozens of maybe like 80 type of investors that we admired. And the publisher actually liked it. The publisher we found said, let's publish the Investor's Bible. COVID hit, and then Ian, Timmy's my brother's son, read it, and you can take it from there.
Yeah,
you can be honest.
So Tim, he just graduated from Columbia this year, and so both of us being fairly young compared to our dads, we read their version of the book, The Investor's Bible, and we told them in a nice way that we didn't think it was going to sell, just because it was a little bit dry, and as my dad mentioned, it was kind of like a Cliff Notes. And so as someone that has read some good investment books and also some intimidating, boring ones, we didn't think it was very palatable. So we took all the research that our dads did, and we kind of combed through them, refined it, and out of all these thousands of investment wizards, which is what we call these great investors, we tried to look at what do these people have in common? What do their philosophies have in common? And so that's how we distilled kind of like the 10 commandments of investing. And the reason why we thought this was important was because obviously these people are all very wise, but also because these 10 commandments we believe hold true across all of the asset classes, not just one or not just a specific one. And so the two of us kind of became co-authors of the book at that point and turned it into the 10 Commandments of Investing after 2 or 3 versions of revision. And another thing that I really wanted to do was I wanted to make it easier to read and more fun to read. So we inserted a lot of stories so that even people like myself and my 2 little sisters could read this book and not be intimidated by it and could still understand it. As well as we also wanted to make it a little bit more diverse. And that's exactly what we did. And we published in November of last year, and the paperbacks came out a few months ago. So it's everywhere.
To be a bit more PC, a lot of the I mean, it's true, right? Investing, especially in English, are a very Western centric, right? The most famous ones are, but we know that there are some top women investors, and there are also a lot of investors overseas. So Tim and Ia wanted this to be a bit more modern and more global in context. So we actually did live some 36 interviews with some super famous investors, and that's on our website. We had one that's on the cover of Forbes. We had the #1 investor out of Canada. We were lucky to access some of these folks that added to the book. Yeah.
I love the two descriptions of that, but it's like so funny. But no, it's great because it's both you guys' truth, right? So I mean, to your point, San, there's so many other brilliant minds out there, women of color, people of color all over the world. And so it's so cool. You could see that, and take a different approach and then reach out to those people and add that to the book. And so congrats to you guys. I mean, it's a Wall Street Journal, USA Today bestseller at the moment, correct? And while, I mean, just cool success from working together.
I think Tim and Ia added a lot to it, Eric, as she said in the stories, and making it more accessible. For me, when my kids were young, I essentially forced them to read 4 Hour Workweek and Rich Dad Poor Dad, and those were amazing books. And so in the back of my head, I'm thinking, okay, well, Ferris says don't, your commodity is time, right? Which that Poor Dad says don't do 9 to 5, which is what my parents and probably your parents taught you. But I was really thinking, if there's a third book I want for them to read, is once they have that Ferris and Kiyosaki mindset, well, how do they actually invest? If they did real estate, what if they did Bitcoin? What if they did stocks, right? And there wasn't really a book that I thought was accessible and easy, but still good enough information that whatever Ia and her daughters or Tim decide to do, whether it's, again, passive investing or actively in whatever asset class, whether it's China or whether it's in India or wherever, there isn't really one book I could think of that we thought could work. And so the 10 Commandments kind of, we think does fit. I mean, it's very ambitious, and I don't want to sound immodest, but we wanted a book that if you did follow the 10 Commandments, which is not her commandment or mine, it's really a compilation of all the greatest investors and what they did, whatever they did, right, that made them successful. Then we hope that this book can be successful in that way. It helps multifamily, but if you decide to do something else in investing, it also helps you by applying the same commandments.
Oh, I love it. Cool. Well, guys, the second part of my show, I ask a series of questions around mindset. So, it's my belief that you really can't see major success or major change in your life until you kind of change your mind first. And so I love to focus on this. So when I have two guests, I'll just bounce back and forth with who goes first. So San, I'll put you in the hot spot first. But my first question is always, do you have a morning routine?
So I appreciate that, but I actually have a lot to say in that, and this is why I actually want to be in a podcast. I do think this is such an important topic, which is obviously your podcast. But I would like to invite Mia. Do you want to take a stab first before I kind of dive in and take the long answer? If you don't mind, Eric.
I don't mind. Yeah.
I do not have a morning routine.
Well, you're 18 and you just graduated your gap year. You could have a little bit of a break there, but yeah.
Yeah. So I'm fairly inconsistent with the time that I go to sleep and the time that I wake up, and my parents nag me a lot about it. But I have a routine in the sense that I have things I like to do every day. For example, I go to the gym at a certain time and I like to walk there by myself, and it's kind of grounding for me, and it might not be at the same time every day, but it is something I try to do every day. And I also just have certain tasks that I like to complete every day. For example, I'm tutoring on the side, so I set aside a certain time for making the lesson plans or teaching the lessons. And so in that sense, I don't really have a time grounded routine, but I do have certain things. But yeah, I'm working on it.
Well, this is being recorded in August, and it is after your school. So, I mean, for me, I'm glad to hear that, because you're only young once, so you gotta sleep in from time to time. So good to hear, Santa. I love to hear your view on this.
Yeah, I think I'll preface this by saying, Eric, I actually am only about 50% of where I want to be. I think I know where I do want to be, which is what a lot of you guess, and I'm sure what you do, and we have 10 commandments of investing, and the 10th commandment is called mind the mind, and essentially is mindset. Is the first 9 commandments are very, very important, but they're useless unless you have a certain mindset and psychology and in many sense routine. And so from talking to from our research and talking to the most successful investors, whether talking to them live or just reading about them, Dalio, Kathy Xu, we interview, they all put sort of your topic as the number one important thing is really having a mindset which drive discipline, right? So I think I know what I want. So I'm very health conscious. Like, yeah, I work out almost every day. I take long walks. I have my Trello board to meditate. Things I do wake up at a certain time. I try to follow it, but my issue is I'm still not quite consistent enough. And so whether it's diet or health, if I'm with the kids and the kids want to eat something, then I tend to break it. and so I found the practice and execution to be a lot harder in life, but similarly, it's in investing as well. We could get into that. A lot of stories where I know that was the wrong thing to do, but emotions take over, and essentially then you do the wrong thing.
Oh yeah, I mean that's so true. The last thing you said there is super true. I think that's a good lesson learned. A couple of things is, first of all, in my opinion, a routine is meant to be kept, but there's also so many times when it's meant to be broken, right? If you're with your family, with your daughters, they want to have something special to eat. It's so silly to say no. I mean, you got to live your life, right? And every routine works for someone else. So there's never a right answer or right thing to do. And that's why I love to ask that question, because it's always different. So, but then at the end, you mentioned, getting emotions involved in learning lessons from that. I think we can all agree, if you've made a bad investment or a bad choice, a lot of times it was emotionally driven and not necessarily what your mind or the paper said to do. So excellent lesson. And we can talk about that more if you like, or move on. It's your call.
Yeah. Well, I think I'm hopeful, Eric, because I've got 3 daughters, and I think as part of our research for the book and our interviews, we've learned that the most successful, I mean, certainly you find traders and short-term hedgies and others, Bitcoin players that just made it really, really big. But consistently, the investment wizards, the true folks that have been successful for decades across different asset classes, tend to be the long-term disciplined investors that buy and hold the right thing. And women have an edge. They tend to be less trade-minded and short-term than men. Men like to gamble a bit more. And in my younger days especially, I was a lot more. I'm still a little too much of that. But I'm learning from the book and from, I guess, being older to stick with, conviction once we've done the research, and try to stick it out and not look at a stock price or look at things on a day-to-day basis. But I think, yeah, you and your sisters have a built-in, I think, studies have shown that women tend to be better long-term investors. So hopefully that turns out true.
Yeah, you can do better in the short term, even than your dad did in the long term, hopefully. And you can show.
I hope
Very
so.
cool. Yeah. Awesome. Well, the next question is, what books are you reading, or what books do you recommend? And you can recommend your own if you want, but it's your turn to go first.
Yeah. Well, my dad already mentioned these, but the whole reason kind of why I started my investment journey and how I even learned of financial independence was Rich Dad Poor Dad first, and then 4-Hour Work Week. And I think those two, I don't know if you have many beginners or people my age listening to your podcast, but at least for beginners or people my age, I think those are really good books to get started, or even younger, since I read them quite a few years ago. But they're very digestible and fun to read. So those are 2 that I recommend. I'm not reading any investment related books right now. I am reading a book by Ocean Vuong called On Earth We're Briefly Gorgeous. It has really good writing, and I recommend.
Awesome. No, yeah, it doesn't have to be that way. And yeah, I mean,
Oh,
We need to talk about that.
that is true. I started reading Tax Free Wealth by Tom Wheelwright
He was at the conference.
at the conference.
Oh, okay.
I'm a little bit over halfway through with that, but it's a
Wow.
really cool book to learn about taxes since I'm gonna have to start paying them.
Yeah, that's incredible. I like kept in my mind for some reason for years and years. I was like, taxes are just a small piece of the pie. Don't worry about it. And the more you learn about it, it's a pretty powerful tool. I mean, to really understand some of the tax strategies, especially behind real estate, it can save you a lot of money. And it's not really saving because it's not a trick. They're built in there for a reason. The government wants people to invest in real estate, so they obviously help with taxes. So I mean, that's an awesome thing to learn at your age. So again, very impressive. And Rich Dad Poor Dad's very digestible. I mean, I think that's a great place to start. And there are people who are starting out listening. I certainly hope. Tim Ferriss, 4 Hour Work Week. That's a great book as well. So I'm glad you guys recommended those. San, do you have any other book recommendations?
Well, at the Summer Conference, we met Jesse Itzler. Is it Itzler? How do you say it?
Mm-hmm.
Who's a close, I guess, confidant friend of Brad as well as Tony Robbins. So he was just very inspirational. And so on the long drive, we bought his audiobook where he spent 30 days with a Navy SEAL to push himself. So that was a really interesting mindset book. We highly recommend it. He's a crazy guy, very inspirational. I think his speech, for me at least, and having been to so many conferences, live or recorded, is probably the best speech I've heard in a long time. Jesse Itzler,
cool.
and I forget the name of the book, but he basically went and hired a Navy SEAL to live with him for 30 days, and they did a crazy workout just to push himself to the limit, just like insane. But that was the context to talk about his life and all the different accomplishments. It's fantastic. He's a fantastic guy. Very.
Awesome.
I like macro books and sort of things that talk about long term. So I'm rereading *Sapiens*, Harari's *Sapiens*, which really talks about the evolution history of Homo sapiens. I like to see how he puts sort of things in context over millions of years instead of just 1 year or 2 years or even 10 minutes. So just to really put, why do we have religion? Why do we have marriage? Why do we have a certain nutrition and diet? That book, I think, is incredible in terms of how that he puts and explains a lot of things in context. And hopefully that makes me a smarter investor because, again, you see the big picture and the trends.
No, I love it. Those are awesome. Awesome recommendations. Awesome. So you guys, you mentioned you're part of the Brad Sumrock group, but the next question is, have you ever had a coach or mentor, and was it worth the investment? So, even if you talk about Brad, but, you can also dive in a little bit more. The question is, have you ever had a coach or mentor, and was it worth the investment?
Yeah. So I've been very lucky. I've actually actively sought out coaches and mentors all my life. So when I started my first fund, my fund one in China was 100 million. Fund two was trending towards 350. I was too young and too inexperienced and just lackluster to raise money. But I sought out and was backed by the former CEO of one of the top companies in Hong Kong, who backed me and became my chairman and introduced his contacts and his investors to me to raise our first fund, 50 million to 100 million. And without that type of mentorship and backing, it would not have been possible. Closer to the 2 years post my 5-year midlife crisis / sabbatical, my brother Mike, my older brother Mike in Jersey, had been doing real estate, smaller bird strategy for about 25 years. Incredible track record, never lost a cent. In fact, everything was infinite returns because, as you do the second to last R refi, he took all the money back, right? And then you just rinse and repeat. So Mike has been coaching me and to a lesser extent coaching Ia and some of the small multifamily. So we've done a few deals together in the past year. And obviously when I decided to scale up, we went with Brad just because of the quality of the other students. We heard great things about different groups, whether it's Rod Cleve, Grant Cardone, or Michael Blunt. It's just, I had some friends that were in the Sumrock group and we ended up just meeting some great people. And so it's been good. It's been a good in the past, I guess 17 months or so since we've joined, we've done 6 deals.
Wow.
Active,
Yeah, that's incredible.
3 smaller ones and 3 syndications, and two passive deals, investments. So I mean, this during COVID and the book, and it's been a good year, and we're just looking to scale that up a little bit.
Yeah, that's the great year. So congrats. All right. Yeah. What about you? Who's been your mentor? I mean, you have one sitting next to you from my view, but I think you can
More of a nag.
Yeah, nagger mentor. But no, I mean, anyone in your world, and have you learned a lot from Brad as well?
Yeah, I would agree with you and say that probably my 2 biggest mentors are my parents, because they're both in the investment world. And just because from a young age, they've kind of introduced the idea of financial freedom to my sisters and I, introduced us to Rich Dad Poor Dad, etc. And so I've been able to learn a lot. And even before I learned to underwrite, I was kind of shadowing my dad and my uncle Mike around, sometimes doing property tours or just watching them explain their deals. So I've been lucky to be able to grow up with that type of access and those types of resources. And as well as in the Sunwalk group, I think to a lesser extent, because I haven't done a big deal, I haven't really been able to learn directly from Brad or anything like that, but I have learned a lot from him, whether it's through his conference or just through members of the Sunwalk group, people that my dad and I have worked with and talked with. We do Zoom, like we did a Zoom meeting this morning about underwriting to go over a few deals that we're looking at, and I learned a lot. And I would say that I learned a lot from pretty much all the meetings, just because everyone has been underwriting for a really long time and doing a lot of different deals.
Eric, do you mind if I ask my daughter a question that relates to your podcast?
Yeah, no, go for it.
So that conference called AIMNACCon in Dallas that we went to, I think it should be your first business conference, right? And there was actually a huge focus on mindset. So there, Brad brought on two guys from that Tony uses quite a bit. Tony Robbins, Pete Boggers, right, and Jesse. I'm curious, your takeaway from that conference, particularly as it relates to mindset. Like, what did you learn? Do you think it was in that portion of it? Was it what was valuable to you, and how does that relate to, I guess, Eric? Because Eric's focus is mindset. Yeah.
Well, I think a big emphasis in that conference, and I would assume a lot of other similar conferences, is that like the conference is not going to be useful to you unless you take something and with what you've learned at that conference and do with it like after the conference. And so Pete Vargas, one of the speakers, he talked about his signature story, is what he called it. And essentially it was a way that you could use other people's platforms and talk to other people and get to connect with them and share your story and kind of ask for what you want and also be able to help them. So I think that was really important. Jesse, I think I agreed with my dad. I think he was probably the best speaker I've heard. He was very inspirational and very funny. And I would say that a big part of his speech was also grit. And he did a lot of cold calling to get to where he was. And so kind of being able to get rejected, but keep on trying. I think that's a big focus.
Oh, that's so good. I mean, some of that answer is just like very wise. I mean, it's incredible. What you said about the conference is absolutely true. Lots of people go there, and it's pretty easy to be jazzed up when you're there, because the music and the lights and the speakers are good, and you're meeting people and you're tired, and there's a million cups of coffee or whatever it is, right? So it's kind of easy to be jazzed up, but you're only really going to get the content is when you take it home. So what you said was super true. I mean, you can hear it and maybe think that's cool. Like, yeah, that's exciting. These people are successful. I can be too. But if you don't really digest it and take it home with you, it wasn't valuable. So that's amazing. And then, yeah, I love the idea. Obviously, I wasn't there to hear that, but like your signature story is such a cool thing. So maybe you can take that and say, I mean, maybe your signature story is that you're 18, but yet, underwriting is not easy. And so for you to really dive into the videos, dive into the Zoom calls, ask questions and learn, that's so cool. So definitely want to tell your signature story, but that alone is something you could add to your signature story. So Sam, thanks for being the co-host there for a minute. That was
Yeah,
awesome.
that was my second conference. I felt this conference, the emphasis on mindset per again your podcast, and bringing in some very inspirational, content-rich speakers. I thought that alone made it worthwhile. It was
Totally
good.
agree.
Yeah, and so I wanted to see if it rubbed off on her, and I think it did.
Yeah, sounds like it.
Yeah.
Cool. So the next question I have is, what is something that you've done that you would not repeat that our listeners can learn from? So San, I'll let you go first on this one.
Sure. I mean, that could take the whole podcast. I think, and I've done this a few times, Eric. So I'm a fairly social person. I'm a deal junkie. If I'm doing something I like, I don't see it as work. So multifamily is an example. Talking to you as an example. This is just a lot of fun for me, connecting and learning from folks. I think in the past, what I've not done well is not have sort of the full cast of supporting team members. And so that includes whether it's ops person, accounting, finance person, the whole package as a business grows. And so that's come to bite me quite a few times in my past businesses where I very much focus on the BD and growth side, but then I let the other parts of the business lag. So I'm, again, just like with investing, I'm a lot more careful now in selecting who I work with, and not just in terms of trust, but in terms of complementary skills to make a business.
Oh, that's such good stuff. All right. Yeah. What's something you've done that you wouldn't repeat?
I think this is maybe a little bit more specific than my dad's, but when I first started investing, I was investing in stocks on Robinhood just with money I saved up from waitressing and odd jobs. And one of the commandments in our book talks a lot about developing independence of thought and doing your homework and seeking religion in your investments. And as a younger person and as like a student, a lot of the times I kind of leaned on my parents or maybe even people on TikTok to pick which company to invest in and which stocks would be good. And so I think I've learned to really develop that independence of thought and do my own research now. And so I would say that's not really a mistake. I would say that's more of like a learning curve, but something that I'm really glad that I was able to get over, and it's made a big difference in my investments.
Oh, love it, man. Both of those are so good. So thank you guys for sharing. All right. So the next one is, what mindset tip can you give to our audience that they can take away? So yeah, I'll put you in the hot seat first. What's a mindset tip you can share with us?
One thing I would say is being consistent. When I first started investing, I kind of would take breaks and also learning about real estate. I would come back from school. I went to a boarding school, so I would go to boarding school and I would just kind of forget about it. Even though I was busy, I could, instead of making time for even just an hour each day, I kind of just completely stopped. And then when I came back home, I would start underwriting again or start looking at deals again. And now that I have a gap year, it's a lot easier, but I would say just trying to be consistent no matter how little each day, like at least try to get something done each day so you don't forget it. Because when I came back and started, I kind of had to restart a lot of the things. And even for underwriting, even though I had learned earlier, I forgot a lot of things and kind of had to do a lot more practice to make up for that. And so I would say just trying to be as consistent as you can.
Oh, so good. So good. Yeah. That, like, I won't say anything to it because there's a lot in there, but so much good stuff. So San, your turn.
Yeah, I think it's related to what you said. I think, I try now as much as I can to take a hammer and really break the shiny object syndrome, right? And in the age of social media, TikTok, and I use TikTok, I admit it, but not just TikTok, Facebook, YouTube. There's just so many shiny objects every single second. And so myself included, right? And I'm 52 now, but certainly for Ida and his sisters, there's always a shiny object that looks better than whatever you're doing. And so to be able to mind your mind and be disciplined, right? Have the right mindset to say, listen, sure, you can make more money doing X, Y, Z versus what you're doing now quickly because you see that in TikTok, but they keep it consistent. So I honestly, I mean, not just to sell the book, I think the book is helping me, it's 10 commandments, but really is choose something that you enjoy, working with people that you like, right? Which is what I'm doing right now. And then learn it, just really, put in the 10,000 hours, whatever it is, do your homework, learn it. And as you said, once you have conviction and you develop some kind of independence of thought, right? You don't do GameStop or Tesla or B-class asset because somebody smarter than you or you think smarter than you or somebody on YouTube said to do it. You do it because you have your own thought process behind it and research. You have your conviction. Then pile in, right? Pile in 10x into that and then just stay focused on it and you're going to win. So I think that's what we're doing now with certain with multifamily, certain classes in certain markets. I still invest because I essentially run a very modest family office. We do have other diversification, but in terms of time, I'm pretty much just all in on multifamily until I get to my 3,000 door goal, which should be in the next 2-3 years. And then once I'm there, we'll talk again. I allow myself to look at another shiny object, but for now, I'm quite happy with what we've chosen.
Oh, love it. Okay. Cool. These last two kind of go hand in hand, but they're in my mind, they're the hardest. So San, you're going first on this one. If someone asks you, well, let's just start with the first one. What is your definition of success?
I think there isn't a fixed definition. It does evolve, and I think it's both a positive and negative in my own personality and my life. It's just I always want to go to the next level, right? So a year and a half ago, I had 0 multifamily. I now have 110 doors active, despite COVID, and a bunch more passive. A year ago, I would have been very happy with 50. But
now you want 3,000?
I'm smelling 500 by year end, and we're going to get there, right? And in terms of active, passive, we have a lot more. So I'm not sure if it's like it's not being dissatisfied. It's just if I enjoy it, I want to put goals out there, right? So for me personally, we just went through my 2021 goals with IA is to close 2 large deals active and 2 more passive deals passive, which will take us to 500 doors. But the other main goal is hopefully motivating Ia. And we actually executed a contract. She doesn't work for me. We're not colleagues. I am the mentor if she wants it, is to motivate her or help her to close our own deal so that she can get there. That to me is probably a sign of success for me. I think 5 years ago, from a health standpoint, I promised myself to be healthier with each birthday. And I think I've achieved that. And I'm going to continue doing that. I do feel healthier than I am today than, let's say, 30 years ago, 20 years ago. Hopefully that keeps on compounding. So I don't really have I just try to do aggressive, but achievable goals and write them down each year and just go for it. Sorry, that wasn't a concise, defined answer, but hopefully it made some sense.
No, and it's all good. I mean, like I said, there's no right answer here. So what we're trying to do is take things and learn. I mean, there's a lot of things in there that you said that maybe you don't even realize how wise it was or how valuable the information was. I mean, even the fact that you said, aggressive but achievable goals, write them every year. That's such powerful information for the listeners to hear is, there really isn't a definition of success. And that's why I asked this question. Sorry to spoil it for you. Yeah. But it's interesting to hear what people think and what it is. And then the other thing, San, is you can read between the lines of what you're saying. It's to help your daughter, that's really in your mind more successful than to achieve the 500 doors. I mean, I'm speculating here, but I would guess if you didn't achieve the 500 door, but you helped her achieve her goal, that would probably mean more to you. Again, I'm speculating, but it's like what the listeners will take away. So anyway,
we also both love to travel. So putting COVID aside, I think one of the beauties of multifamily is once we hit our goals, she has the travel plans and I have my travel plans. So prior to COVID, I was averaging 5 or 6 countries a year. I'm at about 55 countries now. I want to hit 150. So the sooner we hit the goals, the sooner we can both travel together, but most likely separate now. She's got her home friends that she wants to travel with. Right? So and hitting the goals helps her pay for it, helps me pay for it as well. So there's a bonus to that.
No, I'm the exact same way. My wife and I love to travel. It's a huge motivator for us. Is really what pushes me is time with my family and travel. And so I align with what you guys are saying there. So, all right, your turn for what is your definition of success?
Yeah, I mean, I think for me, even though this is kind of generic, I think success is being able to be happy. But I think there are certain things you can do to achieve happiness more easily. Obviously, like physical, mental health, and having family and friends around you that are supportive and good to hang out with. But I think also financial freedom and literacy and not having to worry about like living for the next paycheck or having to rely on someone else in order to survive, and being able to have free time and resources to do what you love, whether that's traveling or writing or anything. So I think a stable financial situation and preferably financial freedom where you don't have to go to work every day and go to a 9 to 5 every day at least would be very helpful to success and happiness.
Yeah, that's so good. You just like blow me away with your answers. It's so good. I mean, that's kind of like what I've taken is what, from what you said is first of all, you said friends, family, those things first, which is incredible that you mentioned them all before financial, because it's really true. I mean, finances are just a key, right? Or just a tool, but your friends and your family and fun and being happy, those are so much more valuable. But you're right. I mean, finances and financial freedom specifically can buy you more time. So if those are the things that you enjoy the most or that make you the most happy, and having some financial freedom, whatever that may look like, can get you there, then that's such an awesome thing. So the final question that kind of goes along with that is, if someone asks you, why are you specifically successful and others are not? What is your thought to that answer? Or what is your answer to that question?
Well, I don't think I've achieved success yet, so I wouldn't say that I'm successful while others are not. But I think one thing that I hope will make me successful is grit and being able to stick with something, and also just having I guess like a bigger vision. And my dad's helped me a lot with that because he talked about goal setting, and he used to call family meetings and make us all do our goals and present our goals and make sure that they're all specific and measurable. And I think that's also really helpful in measuring success, because you need to be able to ground yourself and have, of course, the people around you kind of support you in that grounding. But yeah, I think consistency and grit and sticking with something.
Oh, so good.
Really
all right, San, you have to outdo her. It's not possible. I don't think it's possible. Her answers have been unbelievable. So again, there's no right answer, but they're pretty close to the right. But anyway.
Yeah, I guess success is unique and is relative and it's evolving. So I think, and I'm not boasting or by any ways exaggerating. I think I have worked with, gone to school with, played poker with at least a dozen billionaires that are not inherited. They essentially made themselves billionaires through their hard efforts and their smart brain. So relative to them, I'm a total failure if you count it by the dollar amount. Yeah, again, I don't really think of that as success, and it's just really I take it year by year. And for me, is health, the kids. I do think financial freedom is important because Ear may not want to be a business person or investor. She might want to, join the Peace Corps or become a rock climber. I don't really care, but she needs to be financially free to be able to do that through some type of activity. If it's not multifamily, something else. So I think for me, success as a parent is, and I've set a goal that hopefully through multifamily or other methods, Eric, is to help all three of them become financially free by 21. And I think it's
Awesome.
doable. I think it's doable. Does that mean $2,000 a month of passive, or is it $20,000 a month? It's somewhere in the middle, depending on her lifestyle. It's up to her, right? But we'll try to give the sort of the guidance and foundations for that, and then she can kind of take it from there. And hopefully her sisters will follow. So I think that's a big part. For me, it's just just continue doing fun stuff with good people, and just try to make the goals a bit harder each year. But hitting them makes it more satisfying, right?
Yeah, so good. I love it. Yeah, my financial freedom number in college would have been about, I don't know, $20 more than my rent a month. I was, so, and but I wouldn't take it back. I mean, all that stuff is the way it goes. But yeah, very cool goals. I mean, by 21, that'd be incredible, right? And so, so I guess I'll kind of stop there because I feel like I could just dive into that pretty hard. But San and Oia, I guess what we'll say is thank you so much for being on the show. Where can people reach each of you? And then where can people find the book? And then, anything you guys want to pitch at all, but really where can our listeners reach out to you to learn more?
Sure. Yeah, do you want to quickly talk about the charities and the book and the financial literacy?
Yeah. So we have a companion website to our book called wizards.institute, and you can find the book there and our contact information there as well. And the book is also out on Amazon, and pretty much if you Google it, it should be in a bookstore near you. But I also wanted to donate all the proceeds of the book to charities that support financial literacy, especially for younger kids and underprivileged kids. So we're donating a portion of the profits once less all the manufacturing costs and all that. But we're not making any money from it. So we wanted to give back, especially because it aligns with why we wrote this book. So, yeah. Yeah.
So again, we wanted to come on your stage, Eric, because you got a quality podcast, and we think mindset is very important. So our main objective is I think we're doing well in real estate. Obviously, if we have folks that are interested in partnering with us, do reach out to us. Come to our website, wizards.institute, or my website, sky10capital.com. But really, we do think this is a decent book. As evidenced by hopefully the reviews on Amazon or not, and we hope to reach a lot of people to help with financial literacy, but smart investing, so that we help more folks get to where they want to go from a financial standpoint. So hopefully that your audience will get some value out of that as well.
Oh, I mean, so good, so cool. You guys are giving profits back. I mean, what you're I'm sure you see this or know this, but what you're eventually going to do is, by selling all these books, you're going to help those people who read it, right? But then to give back to financial literacy, you'll reach people who probably even maybe couldn't find that book or couldn't get that book. So I love that concept, and you're going to reach so many people. So I can guarantee you I will buy the hardback version of this book. So very, very excited. Very, very lucky to have you on my show. It was my honor, certainly. So thank you so much for being here. I really appreciate your time.
Thank you, Eric. Appreciate it. That's fun. Thank you.
Thank you for listening to this episode of the Real Estate Mindset Podcast. If you've enjoyed the content today, please follow this show wherever you listen to podcasts. And don't forget to head over to wildoakcapital.com for more information or to connect with Eric directly. Please take a moment to leave a review or tell a friend about what you've listened to today. We hope you'll tune in again soon.